Hello, everyone. Welcome back to our channel. Today, we're diving into some important financial news that could affect borrowers in India. The Reserve Bank of India, RBI, has recently issued fresh guidelines for regulated entities, including banks, NBFCs, and lenders, regarding the imposition of penal charges on loan borrowers. In this video, we'll break down these guidelines and discuss how they could impact you as a borrower. So, if you have a loan or are planning to take one in the future, make sure to watch till the end. 1. Understanding the issue, the RBI noticed that many regulated entities were charging penal rates of interest on top of the regular interest rates for borrowers who defaulted or didn't comply with the loan terms. The central bank realized that there was a need for more transparency and fairness in these charges. 2. The intent behind penal charges. The RBI's main intention behind these charges is to encourage borrowers to maintain credit discipline. The charges are not meant to be an extra source of revenue for lenders. However, the RBI found that various entities were interpreting and implementing these charges differently, leading to customer complaints and disputes. 3. Key changes in the guidelines. Under the new guidelines, penal charges for non-compliance with loan contract terms will be treated as penal charges rather than being added as penal interest on top of the regular interest. This means no interest will be calculated on these charges. Existing compounding interest procedures will not be affected. 4. Reasonable and transparent charges. The RBI emphasizes that penal charges must be reasonable and in line with the severity of the non-compliance. Lenders must ensure fairness and consistency across different types of loans and borrowers. 5. Disclosure and communication. Lenders are now required to clearly disclose the quantum of penal charges in the loan agreement, key fact statement, KFS, and on their websites under the interest rates and service charges section. Borrowers will be informed of applicable penal charges and reminders about non-compliance. 6. Implementation timeline. These new guidelines will come into effect from January 1, 2024. For new loans, the guidelines will be immediately applicable. Existing loans will transition to the new penal charges system either upon review, renewal, or within 6 months of the effective date of the circular. 7. Exemptions. It's important to note that these guidelines won't apply to certain financial products like credit cards, external commercial borrowings, trade credits, and structured obligations. These products have their own specific regulations. Conclusion. So, to sum it up, the RBI's new guidelines are aimed at ensuring fairness and transparency in penal charges imposed by lenders on borrowers who don't comply with loan terms. These changes could potentially save borrowers from unnecessary extra charges and provide better clarity. If you have a loan or plan to take one, it's a good idea to stay informed about these guidelines and how they might impact your financial situation. That's it for today's video. If you found this information helpful, give us a thumbs up and don't forget to subscribe for more updates on finance, economics, and more. Thanks for watching, and we'll see you in the next video.
Follow us for more updates.